Welcome back to IvanVentures, everyone, where we break down the money world in a way that actually, makes sense. I'm Ivan, and if you're just joining us, or if you're new here, this is actually part two of our four-part series on how Gen Z and Millennials are really reshaping the investing landscape and the entire financial future, really.
And I'm Mella, and today's topic, oh my goodness, it's one I absolutely love to talk about, dividend investing. It's not just about those boring quarterly checks anymore that, our parents or grandparents might have talked about. For Gen Z and Millennials, dividends are really turning into like a full-on side hustle. And it's totally changing how we think about income, investing, and just general financial freedom. It's pretty cool.
Yeah, exactly. Yep. This really isn't about waiting until retirement to collect those little checks. It's about getting paid to invest right now and potentially using that income to fund immediate goals, pay some bills or even just grow your wealth way, way faster than you might think. So grab your notebook. Seriously, we're diving deep into the world of dividends today.
Okay, so let's just like start super simple, right? For anyone who's maybe new to this concept, what exactly is a dividend, really? Well, a dividend is basically just a portion of a company's profits that it decides to pay out to its shareholders. So if you own the stock, you literally get a cut of those profits. It's really that simple.
Right. Think of it like this. If you own, say, 10 shares of a company, and that company pays out $1 per share per year in dividends, you'll effectively get $10 annually just for holding that stock. You're not selling anything. You're not trading. You're not doing any extra work. That's what makes it so incredibly appealing to so many people.
Yeah, exactly. It's just passive. And here's, the really fun part, I think. Many Gen Z and millennial investors, they're not really treating these dividends as like retirement income in the traditional sense. They're actually calling it what it genuinely feels like for them, which is a side hustle.
A side hustle. Yeah, absolutely.
Yeah, and a recent 2025 Motley Fool survey actually found that 64% of Gen Z and 53% of millennials consider dividend investing an alternative to like traditional gig work, which is a pretty significant number, I think.
Wow, that's actually higher than I thought it would be, but it makes total sense. It's that idea of your money working for you, not just you working for money.
Yeah, totally. So speaking of that, what was your first dividend check? Like, what was your first one? I want to know.
Oh, I'll never forget my first dividend stock. It was Coca-Cola. It wasn't flashy. It wasn't hyped on social media. Back then it wasn't even a thing really. But I liked the business. The brand was literally everywhere, and I just wanted something steady in my portfolio. That first dividend check, it was small, just like a couple of dollars, I think, but it felt so amazing. It was like my money was finally genuinely working for me, and I hadn't lifted a finger.
Oh, I know that feeling. It's a real tangible proof of concept, right? For me, mine was Pepsi. I actually still remember buying those first few shares and seeing that dividend hit my account. And, I've held it ever since. That experience, it honestly taught me two really important things. One, dividend investing seriously rewards patience. You can't just expect it overnight. And two, it can quietly build wealth in the background, like completely without you constantly watching the market, which is amazing.
Yeah, no, that's so true, and that's really the beauty of it, isn't it? Those first small payments, they really do grow over time, especially, and this is a key, especially if you reinvest them. That's where the magic really starts to happen.
Exactly. Reinvestment is huge. So, okay, let's break it down with a super simple example for everyone listening. Suppose you invest $1,000 in a dividend stock with a 4% annual yield. So that means you'll earn $40 per year just for holding it. Now, if you reinvest those dividends and the company also like consistently grows its payout over time, that compounding effect, it just becomes incredibly powerful, right? It really starts to snowball.
Yeah. Now imagine, right? Imagine scaling that up a little bit If you've got $5,000 invested, that's about $200 a year. Or $10,000 invested, that's about $400 a year. But then you get to like $50,000 invested, that's about $2,000 a year. That's over $160 a month in passive income, and that's without adding a single extra dollar of your own money beyond the initial investment. Imagine if you consistently reinvest and contribute more over time. It's mind-boggling.
Yeah, I mean, that's why honestly so many younger investors are calling it a side hustle because it genuinely is. Your money is like out there earning cash for you while you're literally sleeping or, doing your actual job or, whatever it is. It's just working for you passively.
Absolutely. So here's where it gets really, really interesting, I think. Older generations, they tend to automatically reinvest their dividends. In fact, about 70% of boomers do this. But Gen Z, it's a completely different story. Only about 23% actually automatically reinvest. The rest are doing something entirely different.
Yeah, it's a really interesting shift in mindset. Some are saving those dividends toward really specific immediate goals like a vacation or maybe a down payment on something big or even just, a new laptop. Others are actually withdrawing them as like fun money or even using them for everyday expenses like groceries or, gas. It's just much more flexible, lifestyle driven approach, which is pretty neat to see.
Right, and that's totally okay, as long as it's intentional, right? If your goal, ultimately is long term wealth growth, then yeah, reinvesting is your absolute best friend. But if your goal is income now to supplement your lifestyle or whatever it is, it's okay to take some cash out. The key, like you said, is knowing why you're doing it and being strategic about it.
Absolutely. Okay. So, Ivan, I think it's time for a quick quiz to test what everyone's learned so far. Are you ready?
Oh, I'm always ready for a quiz. Let's do it.
All right. Question one. What percentage of Gen Z actually sees dividend investing as a side hustle? Is it 23%, 45%, or 64%? Question two. Who reinvests their dividends the most? Is it Gen Z or boomers? And finally, question three. If a company pays $1 per share annually and you own 10 shares, how much do you earn per year? So, take a moment, think about it.
Yeah, think about it. We'll reveal the answers in just a moment. No peeking ahead, obviously. This is for real.
All right. So, okay, let's talk strategy now. If you're like just starting out, here's a really simple three-step framework that you can absolutely use. Step one, start with quality companies. Look for businesses that have really strong cash flow, consistent dividend growth, and sustainable payout ratios. Think of names like Johnson and Johnson, Procter and Gamble, or even those stalwarts we mentioned earlier, like Coca-Cola and Pepsi, or any of those good quality dividend ETFs.
Yeah, the ones that have been around forever, right? That's always a good sign.
Exactly. Step two, diversify across sectors. Please don't put all your dividend eggs in one basket. Mix staples, utilities, financials, and even some REITs for real estate exposure. You want to spread out that risk a little bit. And then step three, decide your goal. Are you reinvesting for long term growth or are you actively building income for like current use? Your goal will really determine whether you drip, which is a dividend reinvestment plan, or if you just cash out.
Yeah. And please, please, please watch out for what we call yield traps. If a stock is yielding 10% or more, you really need to ask yourself why. High yields can often signal underlying trouble with the company, and that's not what you want. Focus on dividend growth and total return, not just chasing the biggest payout. That's crucial.
Agreed. Okay, time's up for the trivia. Are you ready for the answers?
I'm ready. Let's hear it.
All right. So, number one, what percentage of Gen Z sees dividend investing as a side hustle? The answer is 64%.
Whew, nailed it.
Number two, who reinvests their dividends the most? That would be boomers.
Yep. Knew that one too.
And finally, number three, if a company pays $1 per share annually and you own 10 shares, how much do you earn per year? $10. So, how'd you do? If you got all three, Miklo says you're officially compounding like a pro.
All right. Let's wrap up with 3 real-world strategies to match your goals. First, we've got the reinvestor. This is 100% drip. Every single dividend gets reinvested to accelerate compounding. This is great for those long-term wealth builders out there, people who are really thinking years and decades ahead.
Yeah, absolutely. Then there's the hybrid approach. So you reinvest 75% and then you keep 25% as cash to fund those shorter term goals. This gives you both growth and flexibility. So you can like have your cake and eat it too a little bit.
Right. And then finally, the cash flow hustler. This is where you take most of your dividends as income. This is perfect if you're building cash flow to supplement a budget, or maybe you're supporting another project or another side hustle, or you just want that income flowing into your bank account.
And this strategy, the cash flow hustler, it's really appealing because it offers immediate benefits. Imagine using those dividend payouts to cover a portion of your monthly rent, or maybe your car payment, or even just stocking your fridge with groceries. It transforms passive income from a long term goal into a practical day to day financial tool. This approach empowers you to actively manage your cash flow, giving you more control over your immediate finances and potentially freeing up money from your primary income for other investments or savings goals. It's about leveraging your investments to enhance your current quality of life, not just your future one. This is especially attractive to younger investors who are looking for tangible results sooner rather than later, as it provides a direct and observable impact on their financial well being.
Now, let's dive a bit deeper into the reinvestor strategy. This approach is really about the long game. It's for those who understand that true wealth isn't built overnight, but rather through consistent, disciplined growth over many years, even decades. By automatically reinvesting every dividend, you're essentially buying more shares of the company, which then generate even more dividends, creating a powerful compounding effect. This snowball effect is where your investment truly starts to accelerate. Imagine starting with a small amount, say a few $1,000s, and letting it grow without ever touching the principal or the dividends. Over time, thanks to the magic of compounding, that initial investment can grow exponentially, becoming a significant source of passive income in your later years. It's a strategy that requires patience and a long term vision, but the rewards can be truly substantial, offering a path to financial independence for those who commit to it.
Then there's the hybrid approach, which is a fantastic blend of both worlds. This is for investors who want to enjoy some immediate benefits while still aggressively growing their wealth for the future. You might choose to reinvest, say, 75% of your dividends back into more shares, allowing that powerful compounding effect to continue building your portfolio. But then you take the remaining 25% as cash. This cash can be used for anything from funding a small personal goal like a weekend trip or a new gadget to covering a small reoccurring expense, giving you a taste of that financial freedom now. It's a balanced strategy that offers both long term security and short term gratification, making it very appealing to those who appreciate flexibility in their financial planning. This way, you don't feel like you're completely deferring all rewards to a distant future, but you're also not sacrificing your long term growth by taking out too much. It's about finding that sweet spot that aligns with your current lifestyle and future aspirations, keeping you motivated and engaged in your investment journey.
It's also important to understand common pitfalls. One major mistake new investors make is solely chasing high dividend yields without looking at the company's fundamentals. A very high yield can sometimes be a red flag, indicating that the company might be struggling or that the dividend is unsustainable. Always look at the company's history of dividend payments. Has it been consistent? Has it grown over time? These are crucial indicators of a healthy, reliable dividend stock. Another mistake is failing to diversify. Putting all your investment capital into one or two dividend stocks, even if they seem strong, exposes you to unnecessary risk. Diversifying across different sectors and industries helps protect your portfolio from downturns in any single area. Think of it as spreading your bets, ensuring that if one company or sector underperforms, your entire income stream isn't jeopardized. A well diversified portfolio provides stability and resiliency, which is key for long term dividend investing.
Finally, let's not forget the importance of continuous learning and adapting your strategy. The financial markets are constantly evolving, and what works today might need adjustments tomorrow. Stay informed about the companies you invest in, keep an eye on economic trends, and be open to refining your approach based on new information. There are many resources available, from financial news outlets to online courses and investment communities that can help you deepen your understanding. Remember, successful dividend investing isn't a one time decision, it's an ongoing journey of education and strategic adjustments. By staying proactive and informed, you can maximize your passive income and ensure your portfolio remains robust and aligned with your financial goals for years to come. It's about building a resilient financial future, one dividend payment at a time. And with that, we hope you feel more empowered to explore the world of dividend investing. Thank you for tuning in to IvanVentures.
Remember, the journey to financial independence is unique for everyone, but dividend investing offers a reliable path for building passive income. Whether you're aiming for long term growth by reinvesting, seeking a hybrid approach for both current enjoyment and future security, or embracing the cash flow hustler mentality to supplement your daily life, the core principles remain the same: patience, due diligence, and a clear understanding of your financial goals. Start small, stay consistent, and watch your money work for you. We hope this deep dive into dividend investing has equipped you with valuable insights and strategies. Keep learning, keep investing, and keep striving for that financial freedom. Until next time on Ivan Ventures.